Okay, shall we start?
Yep, we can get started. Chandrama, good afternoon.
Good afternoon, Vishal. Hello, everyone. Welcome to this live by HiloBiz. My name is Chandrama. I work as a product consultant with Hilo. Joining me today, we have Vishal. He is the CEO of the organization. So, a little bit about Vishal. He's been a serial entrepreneur. He's been in so many different spaces, and I think it's been a decade nearly in the fintech industry already. So Vishal has been in the payment space with many startups. Right now, he's with Hilo, where he largely works with the SME sector. For now, he's concentrating on that vertical. So, with the last 2 years of experience, our experience as Hilo on the secondary distribution network, and our learnings from them and understanding their problems and issues, Hilo has come up with a solution which primarily intends to, help SMEs with their payment and cash flow related issues. So, the platform that Hilo offers is a simplified tool to basically automate all the payment related activities with a primary focus on digitizing receivables. So in this session today, we are going to explore the challenges and the issues that are faced by the SMEs of India, and also, of course, our target audiences, and look at what are the solutions that are available to them. So, Vishal, if we talk about Hilo addressing secondary sales or secondary distribution network, would you elaborate who are the typical target SMEs that we are talking about?
Sure, Chandrama. Thank you so much for the background on HiloBiz. So if you want to look at the SME space, right? I mean, the whole SME space is very loosely used terminology. I would also say. I mean, largely we count 60 million, 80 million SMEs in a country like India, wherein it's very important for us to see who this SME. I mean, the way essentially Hilo is the way we looked at it when we were setting the foundation. That who is this SME buying from and who is this SME selling into, right? So now a SME is a plant, a big manufacturer, and a big brand. An SME is a wholesaler and a distributor who buys from these guys. And then there are a lot of sub dealers, traders, stockists, and then finally, there are retailers from whom people like me and you as end consumers buy, right? So there is a whole chain of SMEs. And in this whole value chain, each of these SME has very different specific requirements when it comes to, the automation, connected banking, procure to pay cycles, visibility of inventory, access to capital, and stuff like that. So from HiloBiz perspective, I guess we were very, very clear that we wanted to stay in the mid segment. So not really right at the top, wherein, you are talking of the big brands, let's say Ranbaxy or Nike or Puma, they have their manufacturing plants, or the big brands themselves. They are fully sorted in terms of technology, automation, connected banking, supply chain financing, all of that. So between them and their anchor principal to whom they sell, right? Or whosoever buys from those guys. So they are very sorted. And then there is the other extreme side of the SME, which is more like an MSME definition in my mind. Neighborhood mom and pop store, kirana stores, from whom we all buy. The B2C transaction basically happens there. So those are players again, wherein there are a lot of solutions available in the market today, and pretty crowded space it has been, and everyone really wants to go after digitizing the kirana. And the void that we saw was largely in the middle segment, wherein a distributor who has bought stuff from a brand or a manufacturer by deploying his own capital, and now he's selling into a sub dealer, a trader, a retailer, and trying to recover his capital from the market. That is where we saw the working capital efficiencies were required. That is where we saw that how do we help this guy to automate this whole working capital payout cycle, And the trick there largely was, again, Chandrama, that what we learned on the ground, that this mid segment was already sitting with certain set of digital tools already. So it could be an accounting tool from Tally or Zoho or QuickBook, maybe a homegrown mobile application or a website, uh, or maybe Word or Excel driven processes. So the key was very tactical for us to make sure that these guys, their existing business tools, were seamlessly connected to the banking ecosystem, and that is what we have essentially built with Hylo. So yeah, so these SME which we are talking of is the mid-segment SME, which is largely a B2B transacting SME. Hope that explains.
Yes, it does. So would you also elaborate the kind of challenges that the SMEs face, the common ones? Yeah. So, what are the challenges that are faced by the whole segment SMEs?
Yeah, so I would probably stay focused on the SME segment that I explained just now, and that HiloBiz caters to today.
Right.
So the typical challenges are that these guys largely operate within the B2B value chain on credit cycles, right? And these credit cycles could be anywhere from 15 days to 180 days. Um, Post COVID, this could be anyone's guess, right? Because people just don't have monies to pay, or they do not have access to quick capital, and these cycles have gone much longer. I mean, RBI itself claims, as per their reports, average payment cycle or the collection cycle for a B2B value chain SME is 90 days and above, and their typical working capital cycle is 300 days and above, right? And now, if you think about an SME in the B2B value chain, his whole business is actually built around the working capital efficiency, as in how much quickly can he rotate the same 10, 20 lakhs or 50 lakhs every month. And that is basically his revenue and the commissions or whatever, the trading margins that these guys earn. So that I guess is one big challenge in terms of being able to collect on time. And this challenge largely is because of lot of manual broken processes, wherein
All
the
right.
Tally does not talk to the collection system does not speak to banking system, the accountant updates in Excel, the business owner is looking at information in a bank statement, and nothing reconciles, right? So the whole idea was the collection, but outside of that, I guess the various other challenges that we found was the inventory status, the payout, which vendor to pay out when, how much to pay out to rotate their inventories and stuff like that. Access to working capital is a huge challenge in this segment. And lenders and underwriters find it even more tough to pay to or to lend to this particular segment because of the same broken set of information. And the typical requirement of this segment within the SME space is let's assume 1 lakh to 10 lakh rupees, but they need this disbursement like in a day or two, and they would possibly use this money for 15 or 20 days and then return it back to the underwriter.
Right.
But those systems aren't available in the market again. So these are the few set of challenges with a SME in the B2B value chain feels today. This is what we have learned over the past few years, and that's the journey basically what we are at.
All right, all right. So, what are the solutions that currently SMEs use in the distribution value chain? So, the ones that they're actually using now.
Yeah, I mean, you mean to say for the problems which exist in the market today, that we
Correct.
use today?
What are the solutions they look to?
Sure. So I guess there are a lot of ERP, new age ERP systems which have automated a lot of this reminder process, wherein the automated information on collections and reminders. Some of them even have integrated with the payment links and stuff like that. Then they definitely look at the NBFCs or the fintech lending companies, which are the new age lenders, to lend money to them, provide them working capital access. There are various invoice discounting companies out there. There are a lot of fintech companies who lend specifically focused to SMEs. Then, of course, digital storefronts, smart inventory management. There are another set of solutions. So there are solutions which are available in the market, which we see that the SMEs are using today. But it's again kind of broken solutions. So they do address the problem, but now you're still talking that an SME still need to go and talk to 4 different systems or 5 different solution providers to be able to fulfill his needs. And that is where someone like Hilo took a lead and said, let's not really solve each of these problems, but can we start connecting all of these guys together so that the SME can actually have a single view of his procurement, of his payment, of his collections, and based on this data, we can essentially enable a faster capital access to him. So yeah, I guess it's all about the solutions. Those are available. They are available for quite some time, and they are evolving as well. But they still continue to be in silos, and they do not really serve the SMEs need very holistically. And yeah, these are the options which probably I would say SME goes after today.
Okay. So when we talk about say cash flow efficiency, so would you also elaborate? So how important is it for the brands or SMEs in the secondary value chain?
Hmm. Very interesting. So I'll probably share an example with a couple of big brands that we are talking with within India and outside India. So so the bigger brands, right? I mean, they largely work with a target of growing their revenue numbers anywhere between 8 to 10% year on year, and that's a massive target for them to be able to turn it around.
Okay.
Uh, as in today, the bigger brands, bigger plants, bigger manufacturers, their visibility on the sales and the overall inventory movement and the cash flows efficiency, as in how quickly are they able to collect money, how quickly their immediate principal buyer is able to move goods, is limited to one hop. So it's more like, if you were a Nike or a Puma, and I am one of the franchisee who buys from you, as Nike, you only know how much I have bought for and how quickly I will place the order again. But now, me being one of the franchisee who has bought for 10 crores this month, I deal with 200 odd sub dealers, retailers, traders, and various other businesses to whom I supply. And this visibility in terms of how am I able to sell and collect this money. So that's the cash flow efficiency part. How quickly am I able to rotate my capital in the market is a direct factor of how quickly a bigger brand can do business with me, right? So if I sell faster, I collect my money faster, I would most likely go back to you again and place my fresh order. But now, this is something which is not visible to the brands today, and brands are very, very keen to get to this visibility that what are the challenges in the secondary sales today. And challenges are largely the same, which I said earlier, right? The collection cycles are longer, working capital is longer, information is broken, lot of manual processes in terms of chasing the buyer to collect the money at a distributor level. So that is where now the bigger brands, and I can name quite a few who have done enough and more effort in their own capacities, like HUL, like PNG, like ITC. Some of them we have been having discussions with in terms of how do we power their secondary sales network on the cash flow efficiency. And if it happens so, it's a direct reflection of how big or how quickly they can rotate their inventories and capital in terms of. So to that point, I guess there are some interesting verticals shaping up with the bigger brands, wherein they are saying that wherever they can help with working capital efficiencies to build out further, not essentially by lending out money, but maybe by just extending the uh, credit cycles. So today they extend a credit cycle of 45 days. So maybe they can work with the distributor to give a credit cycle of 60 days, which is a direct mapping wherein the guy actually has access to additional products and services. So interesting times ahead overall. But yeah, I guess brands, they definitely want to see the secondary sales network cash flow efficiencies to improve. and that is going to be a direct reflection of how quickly they can grow their business.
Wonderful. Vishal, another topic that we wanted to discuss today was cash flow based lending. So, could you explain or elaborate a little bit about that? I don't know if we know them with any other terms, and also we would like to know the solutions available.
Yeah, sure. So I guess cash flow based lending is something which uh, is of keen interest to most of the lenders. Most of the underwriters would like to see, in simple terms. I mean, to again, this is not something which I'm an expert of. This is something which I have been learning from my banking
Right.
friends, my NBFC friends, with whom some of them we are integrating right now again. So when you are in business, right? I mean, there is a historical data to your invoicing, your payouts. So your books tells you, your ERPs tell you that you have done business worth, let's say, 5 crores in the past 6 months. But then the lender or the underwriter wants to map it directly into your bank statement, that you claim that you did invoices for 5 crore rupees. Did you collect 5 crore rupees, or how much did you collect? What was the aging of that collection? What you had invoices to pay out for certain amount. So let's say you had to pay out 4 crores out of that money. How did you pay out that money? Were you borrowing? So a lot of this information around the aging of your collection, time of collection, what amount really gets collected, what are the defaults out of your collection. So all this data combined together is basically an intelligence built on top of your actual business. It's your actual cash flows within the business, that this much money came in, this much money went out, this much money leaked out of the business and you are not able to collect. And this whole information, once it is visible to a lender or a underwriter, based on this whole transactional history, they are able to assess the risk much closely as compared to just looking at the traditional ways of the CIBIL scores, or your rating with the bank, or the amount of money you keep with the bank, right? I mean, now this is something that you're basically risking your money and lending it to someone based on their day-to-day transactional data. And now, as real time you can get this information, is awesome for the bankers and for the underwriters, because now you are basically taking decisions based on the real time transaction. So I mean, the nearest example maybe I'll give you, in the B2C space, on Amazon and some of the e-commerce companies, you will see businesses like Zest Money, who lend you very contextually, right? So I go to Amazon, I want to buy a washing machine, and all of a sudden Zest Money pops up and says, hey, you can take a loan for this particular purchase. Or a bank comes in and say, hey, look, you can actually avail an EMI for this product rather than paying the whole thing upfront. So basically they're lending me, and they're lending me very contextually based on my transactional history with Amazon, that how good a customer I have been, how frequently I have paid, have I defaulted, and stuff like that. And Amazon has my account history with them, which I'm sure once I agree, Amazon would share certain information based on consent and stuff like that. So, on the very similar lines, is where the cash flow based lending is headed. And more so, I guess it has become very, very relevant after the COVID times. So, after COVID, now, if you're talking to a lender or to an underwriter, basically the bank is not even sure if your business exists anymore, because last 1 year has been very, very tough for the SME segment. A lot of businesses have not done business. A lot of businesses do not exist, and they are simply wanting to borrow to clear off the past debts and stuff like that. So bankers, I am back.
Okay.
Sorry.
Okay.
All right.
Yeah. We're trying to connect Vishal again.
Sorry, apologies. I'm back. Some Wi-Fi hiccups.
Sure. So Vishal, so we are still talking about cash flow based lending. We would also like to talk about or understand how's the scene cash flow based lending wise or cash flow optimization wise in India and also globally.
Sure. Yeah. So I mean, just picking the previous question once again,
Okay. Okay.
Chandana, just to
Sure.
cover that
Sure.
fully. So
Sure.
yes, I was talking of the cash flow lending. So that's how basically, I mean, the world is moving in the lending
Right.
space today.
Right.
I mean, it essentially means that you need to be sitting on significant amount of data of the SMEs or anyone whom you want to basically lend. You need to
Right.
know a lot of transactional data, a lot of real-time information of this guy. And the example that I give of Yes Money, that's exactly a replica in the world. And then there are players who are building the same capabilities in the B2B world today. The other connected question which you had asked around that are what were the current options available today in terms of
Right.
flow lending or equivalent solutions.
Right.
So, so yeah, so there are different algorithms or different processes that a lot of underwriters follow today when it comes to something like invoice discounting or vendor financing, wherein you basically have a underwriter buy your invoice or buy your bill, and someone will finance it to you, but then they will finance it to you based on your historical data. So they will ask you for your bank statements, they will ask you for your uh, historical invoicing and invoices that you have received as well, which is that what the statement of your bank matches to. Actually speaking, very similar in terms of what we are talking in terms of cash flow today. But I guess with the advent of this whole open API economy, the whole banking and the financial institutions building the API economy in such a way that it has literally become a commodity right now. That's where now the expectation of the world is that let's look at the whole data as real time and try and serve the customer as real time, and especially the segment that I spoke about. I mean, this is the segment which is typically looking to borrow money in a day or two and wants to return the money in the 15-20 days window, because that's the kind of working capital cycle that these guys ideally want to have. And that is something from a traditional perspective, it's just not possible today, because by the time you get bunch of data from bank statement, bunch of data from the ERPs, I mean, you could be actually collating that data for the next 2 weeks. One sec. But I can see, Chandra, we are talking. You can still hear me, Chandra?
Yes.
I hear.
Yes.
All right.
Yes.
So I would assume that we're connected. So, so yeah. So I guess those are the kind of solutions which has been traditionally available and been serving the market. But I guess with time, the situation has evolved and it demands for more real-time transactions, more real-time disbursement, and that is where now it gets us to the whole connected ERP, connected banking, real-time access of information, and cash flow based lending. Again, it's not really anything new or a new term, but I guess it is moving towards a journey of becoming more real time with all the open API connects globally. Um, coming to your next question, which you said around the overall cash flow optimization scene and the cash flow
Yeah.
lending scene, maybe in India and globally.
And globally,
Yeah,
yeah.
yeah. So I guess the whole world possibly today is talking of cash flow optimization, cash flow lending in different SME segments. If I was to talk of the MSME, the Kirana stores, and the mom and pop neighborhood stores, uh, businesses like Khata Book, businesses like Dukan and OK Credit, they are trying to build very similar efficiencies in terms of cash flow optimization, collecting your money faster, trying to give capital access to these set of customers or the MSMEs faster, and based on all the transactional data. Very similar model what Filobiz is doing in the mid segment, and some of the bigger players and the banks who are traditionally been into the supply chain financing business between the brands and the principal buyers. I guess it's a global theme. I mean, has been a very prevalent growth in all these segments specifically. But I guess the largest void that existed so far was the segment which sits in the middle of the value chain. So the top guys were served with the bigger banks. The smaller guys were being served with the POS acquirers and the other companies like Khata Books and OK Credits of the new age world. The mid segment basically called for a lot of micro integrations, which I mean, Hylobiz and of course few more companies which we can look at. Something like Libero in Europe, which did very similar stuff with QuickBooks and a few other ERPs integrations. There are a lot of examples from account receivables, account payables perspective in the US. Paymate is one such company which is present across multiple countries. So all these guys have been solving these problems for quite some time. But as I said, I mean, the overall landscape has changed significantly with the APIs from most of these partner institutions becoming a commodity now. So yeah, so I guess optimization of the overall cash flows within this segment and riding on data in real time basis to make decisions on cash flow based lending, I guess is gonna be a very very hot space. It's been spoken by everyone. I mean, RBI possibly in India would have done few articles over the past 1 year, and similarly, a lot of other players who are looking at this space very closely. When we started, of course, at Hylobiz 3 years back, our largest focus was cash flow optimization. But yeah, I guess given the past 2.5, 3 years of journey that we have had, and all the strategic partnerships that we have done with all the ERPs and the banks, which brings us right in the middle of access of all this information that the cash flow based underwriters would want to have access with. So yeah, so I guess a huge space, a very wide space, a wide and an untapped market, and a lot of bigger players, a lot of banks, a lot of payment processors, new age fintech companies. They're all trying to solve this problem in their own ways.
Wonderful. That was truly wonderful, Vishal. Thank you so much. So I'll leave the forum open for any questions from our audience. Let's see if we get any questions. We have about 2 more minutes to go. All right. If there are no questions, I would like to close the session. So in a country where about 50 million SMEs contribute to apparently 40% of GDP, what we are doing now, it's truly a very satisfying and a very humbling experience to be able to create a platform that helps the SMEs, especially. So more power to them, I guess. Thank you so much, Vishal. Thank you for your time. Thank you, everyone.
Thank you, Chandana. Thank you for all the lovely discussion, and thanks everyone for listening to us patiently. Thank you.
Thank
Goodbye.
you. Thank you. Bye.